I'm Nick Grove for Morningstar, and today I'm joined by equity analyst Tim Mann to discuss his recent forecast for the building materials and paper and packaging sectors. Tim, first of all, you've got a pretty positive forecast for the building materials sector. What are going to be the key themes and key drivers of this sector in 2016?
Yeah, that's right, Nick. Look, we are positive on the sector. We're forecasting double-digit growth across our coverage universe in 2016. Certainly, I think the key thematic this financial year will be, further strength in housing, particularly new housing starts. So that'll show up in the numbers, particularly for Boral, CSR, and certainly James Hardie in the US, which is enjoying a very strong cyclical recovery. So certainly, we're seeing further strength in housing, although we do believe that is currently peaking. So it will turn down in 2017, 2018. Certainly infrastructure, that's another key driver for the stocks under coverage. It's particularly relevant for Boral, which does have a very heavy infrastructure skew. So, what we're seeing is, some increased road spending coming through in particularly 17 and 18. Adelaide Brighton as well, that's very much exposed to cement and clinker. Again, that'll benefit from infrastructure. But certainly, when we look at these results in 2016 in February, we're going to see a lot of strength in housing coming through.
Tim, which stocks in this sector do you think represent pretty good value at the moment?
Yeah, that's a good question, Nick. Look, broadly speaking, most of the companies we cover are fairly valued. So what we've seen over the past 6 to 12 months is we have seen a derating in the sector. So those share prices have come off more towards our fair value. So that's really in response to concerns that we are peaking around housing starts, and that returns and earnings growth will flatten out a little bit as we go forward. So we certainly do share that view. But as I said, look, probably with the exception of CSR, which we haven't on an accumulate, generally the sector's fairly valued. And, that's a stance we're very, very comfortable with. We think, we might see a little bit more softness going into 16 and 17, and that will provide a good entry point going forward.
You're also positive on packaging and other industrial stocks. What themes are going to be driving this sector?
That's a good question, Nick. Look, I think very much the themes in paper and packaging are probably the themes which have been relevant for the past 2 to 3 years, and that's primarily cost cutting. Most of these businesses, and we're talking about Amcor, Paperlinks, and Aurora, they're very much tied to economic conditions, and they're very much growing at GDP plus growth rates, whether that's in Australia or the US. So they've got reasonably tepid revenue growth rates. So they're very much reliant on cost cutting. So all these companies have spelt out detailed cost cutting plans and are very much through those cost cutting plans, which is positive. So that is very much a dominant driver. I think certainly a second key driver is the strength of their balance sheets. All these companies at this stage of the cycle have very strong balance sheets. And what that really enables them to do is engage in, merger and acquisition activity. So you'll see further examples of bolt-on acquisitions going forward, particularly in the case of Amcor, as it builds out its footprint, particularly in the US and Asia in the flexibles packaging segments. You'll also see that with Aurora in terms of packaging distribution in the US, and certainly with Pact, might make a few more acquisitions in Asia. So, the two key drivers certainly cost cuts, M&A, and probably finally I'd add product innovation. That's very much a key focus for these companies. So they're continually unveiling new products in terms of what their customers expect. So, and that's underwriting things like margin improvements. So they're really the key drivers.
Finally, Tim, is there some good value to be found in this sector at the moment?
Look, as with the building materials sector, we as well look at paper and packaging, and we see that largely as being fairly valued. And again, that's really a function of these share prices coming off over the past 6 to 12 months, coming back towards our fair value. So really across most of the sectors, most of the companies we follow, Aurora, Pact, and Amcor, they are fairly valued. We might see an opportunity as we move forward 12 to 18 months to see these share prices come off even more. Certainly, they have some reasonably strong dividend yields and investors are attracted to them. So in the event that interest rates increased in Australia or globally at least, you might see some of these yield premiums start to fall. So we might see these share prices come off, which again we'd view as being very positive, because fundamentally these are very strong, stable businesses, defensive earnings, strong balance sheets, etc. So no, we're very comfortable with our stance at the moment on those.
Tim, thanks for your time today.
Thanks, Nick. Pleasure.
I'm Nick Grove from Morningstar. Thanks for watching.